Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all those boring corporate filings so you don't have to. Today we are diving into a Form 8K. Usually those filings aren't too exciting, but this one involves a sale of stock that might raise a few eyebrows. Let's see why. This filing is from Photozou Holdings Inc. and it's a Form 8K, which companies use to report major events to investors. The important date to keep in mind here is March 11, 2025, because that's when the event being reported happened. Scroll item 302, unregistered sales of equity securities. Scroll. So here's the core of the filing. On March 11, 2025, Photozou Holdings sold 50,000 shares of its common stock to a Japanese citizen named Katsuya Yamakita. The price was 4 golden sold per share, meaning Mr. Yamakita paid a total of 200,000. The company states that Mr. Yamakita is not related to the company. Scroll Akita aforementioned sale of shares was conducted pursuant to Regulation is something called Regulation S of the Securities Act. Basically, Regulation S allows US companies to sell securities outside the US without registering them with the SEC. This is only allowed if the sale is to non-US people or entities in offshore transactions. And there's no marketing of the sale into non-US people or entities in offshore transactions. And there's no marketing of the sale in the United States. The company is stating that they'll follow those rules. Scroll item 9.01 financial statements and adds exhibits, and scroll Civi, there's nothing here. Usually this section is reserved for exhibits such as financial statements. However, in this case there are none. Now let's talk about what this all means. This is a very small filing, only regarding the sale of 200,000 worth of shares. Now, why would the company sell shares this way? One possibility is that Photozou Holdings needed to raise some quick cash. They say the proceeds are for working capital, which basically means money to cover day-to-day expenses. Selling shares directly to an individual investor under Regulation S can be a faster and simpler way to raise capital than going through a full-blown public offering dart. Now let's look at the price of $4 a share. Without knowing much about the company, it's hard to say if that price is fair or not. If Photozou per share might be a decent price, on the other hand, if it's a thriving business, that could be a steal for Mr. Yamakita. It's worth doing some more digging to see how the company has been performing and what its future prospects look like. The fact that the sale was done under Regulation S is also important. Regulation S offers a streamlined way for companies to raise money overseas. While this is not illegal, it's worth paying attention to if the company keeps doing this. Raising money repeatedly under Regulation S might point to difficulties raising capital through conventional means. So what's the overall picture here? On the one hand, it might be nothing. A company needed some working capital, found an investor overseas, and sold some shares. However, it could also be a sign of deeper issues. It is worth keeping an eye on Photozou Holding to see if they have any trouble raising cash and their overall business health. If the company keeps selling shares under Regulation S, it might be a sign that there are problems. Plank, thanks for watching. If you found this video helpful, please like, comment, and subscribe.